Well, good evening, everybody. How we doing out there? My YouTube friends, Facebook friends, welcome, welcome. You might be watching this by recording. This is Market Monday, October 23rd, 2023. Excited to be with you guys. Was with a nice crew out in San Jose this past weekend for Trade Surge. Lots of new people learning how do traders do what they do. What is it that traders do? Is it guessing? Is it gambling? Is it just throwing mud at the wall and seeing what sticks? No, that is not what trading is at all. And that's what we spent the weekend doing. And tonight, I'm going to show you some things that you need to know as well. Right here, Market Monday, we always go through what's the big news, what's going on in the markets right now. A lot of financial news out there, guys. But how do we sift through it and know what is important, what is not important? We're going to talk about that. Of course, for those of you who are on with us today live, would love to hear from you guys. If you want to drop a hello, a comment, where you're from, maybe a follow-up question regarding anything that I'll be talking about tonight, please go ahead and do that. Would love to have you chime in on the chat so that we can interact back and forth. It's the best, easiest way to get any questions answered you may have. And who knows, the one you have probably is the question somebody else has as well. Is this guessing, gambling, or going for it? It's not. And there are multiple reasons why I can say that that is true. That is not what trading is. The number one thing, we've talked about this many times here on Market Monday, is that we can really look for, using our tools right here, looking at charts by Tradeway, we can look for patterns in the price, patterns created by humans buying and selling. Yes, there is high frequency trading, there are computers, but even that is programmed by humans, right? There are still going to be buy and sell zones, prices, ranges that show up no matter what. And we actually just call those patterns like this one here on GPS that you're seeing on the screen, where we are having a consistent high, right? Consistent higher highs, consistent higher lows. Now, this guy obviously came out of the range, pulled back. Now, old resistance acting for the time being as new support. But I want to show you a couple of things tonight about the markets that we haven't actually talked about. John is with us tonight. I'm going to put it up on the screen there. John says, hi. Glad to have you on here, John. Thank you very much for being here and for chiming in as well. If you have any questions as we go along, please don't hesitate to put that in the chat there. Anybody else, Facebook, YouTube, go ahead and chime in as well, as I said at the open. We're looking for patterns, guys. So you look at this screen right here, and you can see there is a consistent place where the stock hits a floor and pivots up. For those of us who've done some trading, you say, okay, this is support and resistance, right? This is the basic stuff. I like to say it's not the basic stuff. I like to say it's the foundational. When we pour concrete on a house, we don't go, yeah, this is the basics. No, this is the foundation, okay? Even if you've done it a million times, it's still the foundation. And if you've built 1,000,000 houses and 1,000,001, you don't build a good foundation, it doesn't matter how much experience you have, because you got to be good at doing that every single time. Is there more to it when you build a house than just pouring the concrete, putting in the foundation, putting up the framing? Of course there is. But if you don't have that, you don't have much else, right? And for a technical trader, for a short-term trader, this is crucial, okay? Everything else is important, but we build it on top of this. It helps us objectively know, what is the market doing right now? Now, of course, right here, we're looking in the retail, specifically GPS here, the ticker. This is gap, okay? But let's go over, I want to show you a couple of things. Let's look at the S&P 500, okay? Here we have pretty clean price action. There are multiple patterns on this particular chart. And you can watch as they form here, we've got this uptrend, okay? It was uptrending and then it broke, comes up, right? It broke right here. I'm going to go ahead and drop that arrow in so you can see what I'm doing on the screen. And then what happened? It broke down, pulled back up into old support, becomes new resistance, and we get the kiss goodbye, or some call the kiss of death. It's a clean uptrending line break. There's a pattern here. Okay. There is a pattern here. Then there is a break. Kiss goodbye. It drops. Now we have two bottoms. Comes up. Now we have two tops. Comes up. It's pretty strong here. Retests the top. Fails. Where? Just to nowhere? Just down to the middle of nowhere and then just magically turns around and turns up? No, there are these support levels in here that kick in. Now, actually, on this day, for those of you who understand how to use the charting software, each of these candlesticks here is a day. It's one day of the market trading, right? Monday, Tuesday, Wednesday, Thursday, Friday. One day. You can change the candles to be a week. Okay. So I can look at a weekly chart instead of a daily chart. There's different time frames we can look at. It just presents the data to us in different denominations. Well, here we had a major bounce at a weekly level. It tried and it failed. That gives us good data. It means what? It means the sellers tried to step in at the floor. They're just not very strong. They weren't strong enough yet. Okay. It comes down, consolidates for a few days, bounces up. And then we get what? An M, which is another name. I'm going to actually go ahead and delete this. We get a double top. Right where? Right there at the 50-day. Right there at the gap line between these two candlesticks, right? I'm going to go ahead and grab my arrow again. We had a bottom. It comes up, makes a high, drops, immediately comes right back up and makes another high. But did it get higher? No, it did not get higher. It went up, down, up to the same level, meaning the buyers tried to step back in and push it to new heights, and they couldn't do it. They still couldn't do it. It's like they took the battering ram against the door and just couldn't break it down. And what happened? Then it falls. This is an M. Where does it fall? Does it just stop somewhere random again? No, it falls down into this support level. We've had drawn on here for more than weeks now, maybe even a month at this time. Okay, we've had these levels drawn into this. Once we have two bottoms here, we can start to look at, once we have 2 points, we can start to look at drawing support and resistance and then looking for a confirmation on that move. Now, Blair, does that mean you think it has to go up to 4,300, even maybe all the way up here? Well, if the pattern continues, of course, that's what we watch for. But it may not. What I'm saying is it doesn't guarantee that it's going to do that. But we trust the pattern until the pattern breaks. But you can see 1, 2, 3, 4 different patterns here. The uptrend, the kiss goodbye, the downtrend, which is what this entire screen right here we're looking at is. Okay. What's a downtrend? Lower highs and lower lows. Lower highs and lower lows. Okay. So let me get rid of this. There we go. This is how we identify what the price is doing. Okay, so this is where people will come in and go, Blair, I've never seen a stock chart in my life. It just looks like, first time I showed a stock chart to my wife, she said, I don't even know what we're looking at here, right? I hadn't taught her anything yet. I started knowing nothing. Nothing. I knew nothing. In 2015, February of 2015, I walked into a Tradeway class. I knew absolutely nothing about this. So if you're out there tonight and you're going, hey, I know absolutely nothing or pretty close to that, you're in the right spot, right? You're in the right spot because this is a learnable skill. She said to me, I don't even know what we're looking at. What did I begin to do? Began to show her patterns. Patterns. Okay. Here's some insight. This is some really interesting insight to some things in the market. When you can start to see patterns, you can start to see pivots. When you can start to see pivots, then you can start to take probability. When you start to see patterns, you can start to see pivots. When you see pivots, you can start to have probability. Okay. That's a baseline. It's the foundation that we pour. Here, it's not making lower lows, is it? It's making even lows. They're the same. They're horizontal. They're not getting lower. Okay. This isn't guaranteed to bounce all the way up to 15,221, but it's holding at the level it held at here, here, there, here, and here over and over again. It looks like a doorstop, right? This is a wedge. It's moving down on the top, sideways on the bottom, showing a little bit more strength here on the NASDAQ 100. Now, I told some of our students last week, there's something in the S&P 500, which is the index that we follow most here at Tradeway. If you look at a breakdown right here in the bottom left-hand side of the screen, you can see this is the breakdown of the S&P 500 broken into 11 sectors of the U.S. economy. So you can go, okay, what's the best, broadest picture of some of the best companies across the economy, not just a few from tech, not just a few from healthcare, but really a broad index, okay? Now, the S&P 500, there are other indexes with more stocks than 500, but the S&P 500 is a very, very significant, highly used index, and it's the one we focus on the most. So I can go out and I can look at the S&P 500 index and see the pattern. I get an idea of the activity, the tone of the overall market. This is good for me to know how to do. But speaking of the S&P 500, I'll go back to this other screen here, okay? Here we have all the sectors and then industry groups that fit within them, okay? Something to know about the S&P 500. We've talked about the S&P on here many, many times. If you've listened to me or any other of the other coaches here at Tradeway, you know that we have talked about the S&P index constantly, right? But I want to show you, I'm going to pull this up in the background and I'll share it with you guys. There's something out there called the Magnificent Seven. This is not the movie, okay? The Magnificent Seven. And what this is there are 7 stocks, okay? 7 stocks in the S&P 500 that are bringing a vast majority of the growth of the S&P 500 to the index. So you can see, let's go back to the chart. You can see how the index has been doing. Let's even go and switch over to one of those weekly charts, okay? Down here, we've got March 2023. All right, we'll go a little further back. There's January. So we started down here, okay? And if I even go out further, this is where we were. We came pretty close to getting all the way back up to where we were. So this year, right, starting right about there, this year has been a nice swing upwards, okay? So the market, despite fairly adverse economic conditions, okay, has done pretty well, okay? Now, the question is, and this is something I've seen recounted over and over, people are saying, well, inflation numbers are getting better. But folks going out to the grocery store and the pump and living their everyday lives are not actually seeing things getting a whole lot better. So what's really lifting this market? Well, when we talk about the Magnificent Seven, there are 7 stocks in the S&P 500 that have moved up over 50% this year, okay? 50%. I'm going to There we go. Now I can see it. I'm going to share this with you guys so you can see this. What's happening here is that the S&P 500 is not 500 equal votes. When we look at an index on the screen, that's 500 stocks we're looking at in one screen. It's a quick, easy way to look at the whole economy and go, all right, do I want to buy into this market or do I want to sell into this market? Maybe I want to stay out of it entirely. Maybe I don't. We can use the S&P to do that, right? It helps us. The SPY, the S&P 500 ETF, is one of the highest traded securities in the world, right? The volume on that is massive. The options for that, the SPY, are massive, offering even daily expirations on that index. Notice the growth here. The S&P 500 versus this Magnificent Seven, seeing enormous numbers on those, okay? Now, what's crazy is that if these 7 stocks were to stop performing, okay, the index, I'm going to go back to the chart here. The index itself, getting a little tech in the background here. The index itself would not be able to sustain where it is. So here's something I want you guys to do a little experiment in the coming days. I'm going to go back to the daily. I'll show you what I looked at this week specifically. So obviously today being Monday, Friday, looking out at the indexes as the market came down to the previous low right here and this 200-day moving average right here, okay? Anticipating a bounce up in the market for several reasons. One, it's at a support level. Okay, it's not guaranteed to hold there, but it's at a support level. In fact, it got a fairly nice bounce earlier today and gave most of it back. So there is some weakness in here. But let's go in and look at this. Some of those stocks I just showed you, okay? Let's go AMZN. That's one of these Magnificent Seven. Okay, I came in and looked at this and said, oh, this is in a support level. We got earnings right around the corner. Okay, earnings is important. We don't trade over earnings. Support, 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 support today. Okay, all right, that's one of them, at support. Google, go over here to Google. Okay, there's another one. Earnings coming up at support. Okay. NVIDIA, another big one. NVIDIA has been a huge one this year. Where is it? Oh, no, that's not what I meant to do. NVIDIA at support, right? So what we're seeing here is these particular companies, okay, they're having a much weightier influence on the S&P 500, but they're also at support. So wait a second. What we're finding is these 7 stocks have had more influence over the rise of the S&P 500 than the other 493. If you take those 7 stocks out of the S&P 500, it's basically flat for the year. If you just take those 7, they're way, way up. So you go, oh, the market's doing pretty well this year. Is it? Some of it is. Certainly these 7 companies are, okay? But that doesn't mean the overall market is really doing as well as it seems, because these 7 stocks are really holding up the market, okay? See, S&P is up, but this S&P 7 is up 50%. If you take them out, the S&P, what we might call the S&P 493, is flat. What does this mean for you and me? It means if investors bailed out on these 7 stocks, Tesla, Amazon, Microsoft, Apple, NVIDIA, Google, Alphabet, right? Meta, What would happen to the stock market? What would happen to people who are looking to protect significant retirement, significant investments, looking for a bigger move down in the markets and the indexes that a lot of investors waited for in 2023, and they were disappointed they didn't get that? A lot of the bears out there, they had to turn tail this year because it didn't really do what they thought it would do. Now, historically, the fall tends to be a more bearish time, tends to be a rougher time in stocks. And we're seeing that happen here. Okay. But it's important to recognize that the market is not actually fundamentally as strong as it may seem. But as these particular companies that have such a huge amount of weight in the index are going up, and they're going up so significantly, it's making the overall index 493 other companies, which haven't really gone anywhere, look like it's all doing really, really well. And if somebody didn't understand this dynamic, right, they might think, well, it's doing better than it really is. Furthermore, as a trader, these are 7 stocks that are doing remarkably well. Okay. So it, at the very least, is something we could pay attention to. As I mentioned, I've got these stocks in here. And on Friday, even though these stocks in particular had not bounced, I could come in and look at them and go, okay, they're almost all, not all 7, but almost all 7 are at a significant support level. Okay. A significant support level. So the probabilities of seeing a bounce today on Monday seemed pretty high. I had some students that were in put option trades. So these are the kinds of things we want to know as they come up. Moving over to the meta chart here. Looking like I'm just having a little bit of a slowdown in my browser here. So let's go ahead and open up a new charts window. We'll just let that go in the background there. So this is something that you can look at. What is the Magnificent Seven? Well, I listed them off for you. Interesting to know, both for my long term, it's been a bit of a theme that we have talked about the last few weeks, both for my long-term traders, right? Or excuse me, my long-term investors, and even for my short-term traders out there. Okay. Looking at a lot of these really significant, heavily influential stocks coming into support levels, you look at the list of 7, you see 6 of them coming into major support levels, and then the market's up the next day. Not a coincidence, right? Also looking at the fact that if, again, rotating primarily tech, I mean, think about the companies I just read off to you guys, right? Tesla, Amazon, Microsoft, Apple, Nvidia, Alphabet, Meta. That's a lot of tech. Tesla potentially being the exception there in terms of straight tech. But at the same time, it is a tech company, right? So that's pretty interesting to see that it's almost all in that sector. What if that really begins to pull back at any point? You're going to see some pretty significant moves in the S&P, because if the gains, right, on these 7 stocks is nearly 55% this year, and the rest of it is about 4-5%, that's a pretty big disparity between what those 493 stocks are doing versus those 7 stocks. Okay. It also gives us, as I've mentioned, an idea of where I may, yeah, it looks like I got, do that, where I may actually want to look at investing in some of these, or I would even say more specifically, actually trading some of these really hot stocks that are in pretty good patterns. Okay. So that is a very, very good thing to pay attention to as well. Primo is with us. Same here. So Primo, I don't know exactly what you're referring to in the same here as far as where we were at in the conversation, but just going, okay, this is something I ought to look at. Okay. Something I ought to watch. I've got a little short list, right, in my software where I can just scan through those 7 stocks. I'm not saying I'm making every decision based on those 7 stocks, but I've said to people for a long time, the market, the economy is very tech driven. Okay. And if you look at the weight given to stocks in the indexes, it's very heavily weighted to tech. Okay. Not exclusively, obviously, but heavily weighted to tech. So it's worth looking at it. Even if I was going to go in and trade in the S&P, I'm paying attention to what's happening in the tech sector, because if the tech sector catches a big bounce, it tends to have a pretty big influence on everything as a whole. And this 7 that I just showed you is proof of that, right? It's pretty clear. So giving you another tool that you can use to go in and look to what? To know the future? No. To manage risk, to know what's going on. Okay. We don't want to be caught off guard thinking, wow, I thought everything was a lot stronger than it was. And I missed out on a layer of insight because I could have been charting and looking at these 7 stocks to see, hey, what's really going on in here? And as there's a convergence in those 7 stocks, is there a higher probability we see a move in the market, right? Now, those stocks may not hold its support. Maybe we got a bit of a bounce today and they break support. But if most of them break support, that's also good to know. So I don't need it to go up or down. That doesn't matter to me. It's going to go one way, it's going to go the other. What I want to know is that I'm helping you guys to see whichever way it goes, you know what you're going to do. Now, if you've never taken a class with us, okay, tradeway.com, events right there on the main page. You can join us at tradeway.com. I'm going to pop it up into the chat for you guys. I personally will be teaching a step 1 start your journey class this weekend. You simply go to tradeway.com/events and you can register for it there. We're going to get together 9:30 Central Time this Friday morning and Saturday, 2 days. I'll be there with other coaches teaching the foundation of our stock trading system so that you guys can join us there. Okay. We'd love to have you guys one more time. That is tradeway.com/events. I'm putting it into the chat right now. It looks like oh, good. I thought it added another slash in there. So that is correct. For my Facebook and YouTube friends, by the way, if you think somebody else out there needs to hear this message tonight, would be interested in coming to the class, go ahead, share this with them. Send it on over. If you're on Facebook, go ahead, tag their name. If you haven't given it a like on Facebook, go ahead, click that thumb, like Tradeway, and we'll let you know anytime we're going live, because we do throughout the week as well. For my YouTube friends, go ahead, like, subscribe, click that bell, and you will get notifications anytime we go live. We're doing Monday, Tuesday, Wednesday, Thursday, live trading, Bible training, market updates just like this, all kinds of good stuff for you. So make sure you follow along. Appreciate each and every one of you being on with me tonight. Thank you so much. Check out the Magnificent 7. Put it in your charting software, follow through, watch them, and see if it doesn't give you another layer of insight for what's going on in the markets as we close out, getting pretty close here to the end of 2023. Thanks, everybody, so much, and we'll see you